And the crypto industry is celebrating a new milestone after the SEC paved the way for the eventual launch of the first exchange-traded fund investing directly in the Ether token.
There's two pieces of approval for one of these types of products. There's the listing approval, which is what happened yesterday, and then there's the approval of the product itself, which is still pending. What's that is called the registration statement.
Still on the Ether ETF, Fidelity has filed its amended S1 registration statement per the latest ETH ETF update from the block. The following answers the burning question about how the SEC will approach staking. According to the block, Fidelity has removed all language about staking in its amended statement, going back on the previous decision to stake a portion of the fund's assets with a staking provider to generate staking rewards. While the SEC stance on staking has always been clear, some Ethereum investors are holding out hope that other amendments will be made later, allowing for funds to stake their assets for higher gains. There will be more developments on this over the next 2 days when the SEC will be mandated to either reject or approve VanEck and ARC21's Ethereum ETF applications. According to data from CoinMarketCap, Ethereum, the native cryptocurrency of the Ethereum network, has gained around 30% in the past week, buoyed by news that the U.S. Securities and Exchange Commission has made a U-turn regarding the approval of spot Ethereum ETF after the SEC approved 11 spot Bitcoin ETF. In January, there was a lot of speculation about Ethereum-based spot ETF, however. Optimism quickly dimmed when analysts reported that the regulatory agency was not giving the Ethereum ETF applications the same attention it paid the Bitcoin ETF applications before approval. Bloomberg ETF analysts James Seifert and Eric Beltunis, who gave the Bitcoin ETF a 90% chance of approval last year, suddenly announced they were dropping the chances of approval for the ETH ETF from 70% to 25%. According to several tweets from Eric, the decision stemmed from the SEC's relative sluggishness and lack of interest in the ETH applications, especially compared to the Bitcoin applications. However, new chatter suggests that the SEC is now showing a different, more positive outlook toward the ETH ETF applications. In a post shared on Twitter on Monday, senior Bloomberg ETF analyst Eric Beltunis wrote, "Update James Seifert and I are increasing our odds of spot Ether ETF approval to 75%, up from 25%, and hearing chatter this afternoon that the SEC could be doing a 180 on this increasingly political issue. So now everyone is scrambling because, like us, everyone else assumed they'd be denied." Eric also noted that the 75% cap could increase if there are more positive signs from the SEC concerning the applications. In reaction to the news, many people identified BlackRock and its powerful CEO Larry Fink as the reason behind the SEC's sudden change in attitude. According to a comment on Eric's post, if BlackRock wants a spot Ethereum ETF, it gets a spot Ethereum ETF. Galaxy Digital's Alex Thorne believes the SEC will try to save face by classifying only staked Ethereum as a security. The Galaxy Digital head of research adds that doing this will allow the agency to approve Ethereum ETF without negating its earlier arguments against the leading altcoin. In a recent discussion with Mando and OSF traders and co-founders of Wrecked Guy Real Vision, CEO Raoul Powell discusses his long-standing Ethereum thesis.
Imagine if we wind forward and before we know it, there's more financial assets going onto ETH because you don't get fired for using ETH, right? Let's say more financial assets, and they could be on a layer 2, but it still starts to accrue value because financial assets are rapid velocity and high volumes. That narrative can switch so fast because the meme coin narrative is just a bunch of us who live in crypto land as natives. But really the thing that will drive this space is new capital into the applications layer of what this technology does.
Why did the SEC suddenly abruptly approve the Ethereum ETF when it took them losing a court case for them to approve the Bitcoin ETs?
So what is different this time?
What is different this time is there was a settled issue of whether the underlier, Bitcoin, here the underlier is Ethereum, was a security or not, or transactions in Bitcoin were securities transactions. The SEC has not definitively said, up till now, and they still haven't definitively said, that underlying transactions in Ethereum are not securities transactions.
But the reason this got approved so quickly,
I think it has been a very big political push because of the election year. And somewhere you have to say the Republican candidate being so pro-crypto have made Democrats to really pay attention to it, that suddenly out of the blue, we have a very hushed, unprepared ETF approval. We're still waiting for the trading to happen, but the market expectations in last 2 days got built in, but it's not really there. We have not crossed 4K. All-time high prices were 4.4.
true. Right now, one Ethereum is worth $3,700 at all-time high, which we have not crossed since November of 2021. We were 4.81 thousand per ETH, still 23% from all-time high. To me, the approval of these ETFs essentially clears it like regulatory-wise. What this means, we're at least hitting all-time highs again. That's baked in. And again, I only say that because when the Bitcoin ETFs were approved January 11 of 2024, here, the market started to understand that Bitcoin was in such a better place regulatory-wise, institutional-wise, adoption-wise than when we hit those old-time highs in 2021. We then had that clear shot to surpass them again. Another thing to understand is that Ethereum balances on exchanges are at their lowest levels ever, down to 13.7 million, or roughly 1/3 of what was available in May of 2021. This is now right before what we expect to be another 1 to 2 million in demand from the ETFs, meaning expect this number to go down another 1 to 2 million. Let's get back to Paul's video as he speaks further about the general state of the crypto market and the certainty of a global liquidity expansion before year end.
It's all noise, right? After every halving, we tend to have this transition that I call from crypto spring to start of crypto summer. We usually get this sideways chop, and it's kind of normal. But this market is hilarious because everyone loses their minds and they're like, it's all over. It's the worst thing ever. Everyone gets chopped around, trading around in stupid shit they shouldn't be doing. And then just when everybody thinks it's never going to move again, it then explodes higher. So, I've been like you, just kind of wryly observing the psychology of this space. I mean, the psychology of this space is basically like an 11-year-old. And when you play through all of this and you ask people their deep-seated fears, everything's going to crash, or China's going to invade Taiwan, or the Chinese currency is going to devalue, or what's happening in Japan, when you play through all of these, the outcome for all of those is more liquidity. Every single one.
With renewed hopes of the SEC approving more crypto-based spot ETF, which will give institutional investors more access to invest in the cryptocurrency market, crypto prices are soaring, led by Ether, which has climbed by over 21% in 24 hours at its current price of $3,783. The leading altcoin is at its highest point since hitting $4,000 in March. Bitcoin has also recorded significant gains and is trading at multi-week highs. What are your thoughts on the SEC's sudden reversal? Do you agree that it is all politically motivated? If so, how will this impact the cryptocurrency market in the coming days and weeks? Please drop your comments and observations in the comment section below.